stock analysts wanted to have an overall feel. What is the market doing? Is the market rising or is the market declining? So in order for them to have to determine whether the market is rising or declining, they need to have an indicator. Now, every developed countries, they have something called a stock exchange. Stock exchange is a place where people buy and sell stocks. That's why the word stock exchange, they exchange stock. You buy stock, sell stock, exchange stock. So stock exchange. Now, but Singapore is a bit different. Singapore stock exchange is slightly mature. We have about 780 companies that is listed on the Singapore Stock Exchange. In US, there are about 3,006. But before any stock exchange reaches that 780 or 3,006, they go through this journey of 1 stock, 2 stock, 3 stock. They go through this journey. So for example, when I was in Cambodia, right? Cambodia, the country only had 4 stocks. Stock exchange only got 4 stocks. You got nothing to buy actually. 4 stocks, But it starts somewhere. So let's say Singapore is a very new country. Stock exchange got started, you got 1 company. As time passes, you will mature and become more and more companies. So first company, 2 companies, and then eventually you have hundreds and thousands of companies. For example, like a New York Stock Exchange. Now, New York Stock Exchange has 3,600 companies. And because there's so many, it creates a lot of confusion. So what happened was, in the early days, stock analysts wanted to have an overall feel. What is the market doing? Is the market rising or is the market declining? So in order for them to have to determine whether the market is rising or declining, they need to have an indicator. So where do they get an indicator? Very easy. They look at all the 3,600 companies. They handpick those that best represent the market. So in other words, there's a group, there's a cluster of companies. If the average share price of these clusters of company goes up, that means the market is going up. But they use an animal to represent. What's the name of the animal? Bull. In other words, the market is bullish. Okay? If this indicator falls, this average number falls, then they use another animal. What's the animal? They use the word bear. Now they don't use a snake or chicken. So a bull is what? Bullish. A bear is what? Bearish. So this average number has a name. And analysts call this average number, right, an index. Got it? So index is the average number of a cluster of stocks. Okay, Index goes up, bullish. Index comes down, bearish. Ready?
Hi, this is Cayden. Remember to click on the subscribe button and turn on the notification to be notified of our future training videos.
Straits Times Index, which country? Singapore. Very good, you are actually this one. Next one. Standard and Poor's 500, which country? US. Looking at the name, Standard and Poor's 500, that means it's the average share price of how many companies? 500, yeah. Sometimes the index name, they put a number, so it's quite easy to remember. Now, next one. Hang Seng Index, which country? Hong Kong. Now they got riot and all, a lot of funny things. Now, last one. Nikkei 225, which country? Yeah. How many stocks? Average share price, how many stocks? 225. It's quite easy, right? But the question is, there are so many, because every country got one index. Wow, so many. Which one give me 9.7? Which one can help me make a million? Now, I just want to let you know that not all indexes are created the same. Okay? Now you know index. Average number of a cluster of companies. Then what is an index fund? There's an extra word, fund, over here, right? Now, very easy, After the analysts created this thing called index, remember, you cannot buy index because it's for academic purpose. You cannot buy index. So another group of fund managers came along and said, hey, I want to make money from you, investors. Why don't I take your money, 100, I put together, and I mirror, and I mimic, and copy after the index. If the index has 500 stocks, give a guess. This money, right, they will buy how many stocks? 500. So in other words, if this index has Apple, they will take the money and then they will buy what? Apple. If this index, this Apple takes out 5%, they will take the money and they will buy how many percent of Apple? 5%. So in other words, this fund copies after the index shamelessly, which means that if the index goes up, the price, the share price of this fund will go up because it copies shamelessly, right? If the index goes down, the share price of this fund will go up, down. So this fund, which copies after the index, has a name. So what's the name? The name is called an index fund. I don't know where I get the joke. It's an old joke of my generation. Apple Pen. Now, so index fund is also known as an exchange traded fund. So in other words, as you cannot invest in S&P 500 index, but you can invest in S&P 500 index fund. And this S&P 500 index fund is also known as S&P 500 E1 ETF.